So with the algos, you mentioned the algos coming in, the technology and everything like that. How did that change your I guess sense of from the open outcry, the psychology, the sweat that you could actually smell, when there was fear in their eyes, to okay, now it's just all being done by computer?
Well, that's where the technical analysis really came into play, because you had humans in front of you. You could see human behavior. You could hear a buzz on the floor of the New York Stock Exchange. You walk the floor now, you hear humming of computers. You don't know if the Dow's up 200 or down 200. Back then, you knew. You could tell by the attitude, tell by the smell in the room. So the technicals are what always gave me a little advantage. I credit it to why I went from 330 and survived the 15. I was always one of the top producers. I was always somebody people could talk to because they didn't understand the charts. What levels are you looking at, Jay? And I would tell them, technicals is always if this, then that. Yep. So I would get them prepared. If it does this, then be prepared for that. And being on the floor, risk management, which is always job number 1, job number 2, and job number 3. Job number 4 is lunch, but job number 1, 2, and 3 is risk management. Technical analysis is the perfect tool for that, because if something changes, you have to change. I'm not going to just watch the computer screen and get run over because something broke out above a level, or, we had a little cross from oversold to just back above 30 on the RSI, or you can use Bollinger Bands. I used every little indicator, anything that I thought gave me an edge. But the technicals are what really helped me explode my career from a trader and made myself more relevant to the trading community, because not everyone understood this. And I had a good understanding, grasp, and I could talk about it in a way that was relatable. Too many people come on, and I could do it too. I could talk about Ichimoku Cloud and Gann and Fibonacci levels all you want. You want to go there, let's go there. But I realize when you're talking to people, when I do these shows, I do it for an audience of one. That's my mother. If my mother can understand what I'm talking about, I'm doing a good job. I know you guys can understand it, but I want a general audience to have an idea. Okay, we want to buy it. If it does this is how we do it. This is how we manage risk. And then make the trade their own. I'm not here to give advice and then, get yelled at for being wrong or praised for being right. I want people to know the setup, what they're getting into, and how they should play it once they do. But knowing, first and foremost, manage risk. And maybe that made me a very boring person, a scary person, because when I bought something, I think of the downside before I think of the upside. Am I going to cost average into this trade? When am I going to cut bait? There are so many different structured products and stocks you can trade. Don't get married to one. And too many people did. And I saw too many people blow up over the years.
Yeah. And I got to credit your Uncle Ralph, because he is such a genius in terms of keeping a lot of the things simple. And for those people that don't know, Ralph Akampor, of course, he's the one that kind of started the CMT program, the chartered market technician. And, when he was on our show not too long ago, I mean, it was like, hey, is it in an uptrend or not? Are there higher lows? Are there higher highs? It's, sometimes just that simple. So very, very good stuff. Arusha, what did you have?
Yeah, well, first, Ralph is the godfather. So
right.
You definitely want to.
He's also my godfather. So does that make me technical analysis? I don't know.
Yeah.
But Jay, talking about the indicators, after you learn, because especially going through the CMT program, you learn about tons and tons of different indicators, and they're all super cool. But how did you evolve? Did you find yourself, after using them a number of years, that you kept them, or did you reduce and try to simplify? How did you evolve during your
I keep evolving with those indicators. I try to keep it simple. So I was blessed. When I studied for my CMT exam, guess where I was? I was on the floor of the New York Stock Exchange. Wow. Guess what I did? I was a market maker. I had access to buy and sell stock like no one did. It wasn't really my money, but I treated it like it was. And I would buy a stock based on, we're studying Bollinger Bands today. Okay, it just broke above the midline of the Bollinger Band. It's out of the Bollinger Band, coming back in. I would test different indicators every single day. One, to help me study for the exam, and two, put it to work. That's the only way you really learn, is if you kind of put it to work. So paper trade, write notes as you're doing these indicators. The indicators that work for me, the simplest ones, are MACD crossovers, where there are RSI levels, especially when we're oversold. We go to, when we're oversold and we go back, we're oversold, we go back below 70. I probably want to sell it. Oversold doesn't mean you have to sell sell the stock, it means it may be getting a little toppy here or trend sideways for a little while. So those are the simple ones. Moving averages and VWAP trading. My relationship with Brian Shannon started at a CMT event. I brought him to the floor of the New York Stock Exchange when I was on a panel, and I said the biggest change in the industry is people don't care about price. When they come in and they ask me, Jay, how's IBM look this morning? They don't care if it's down $2. They want to know the volume. Oh, 20,000 shares, here's 2,000 shares to buy. I just want to be 10% of the volume. So I brought Brian down, and he sat with me as we opened IBM, ironically enough, and he was floored that all they cared about was volume. Everyone was volume weighted average price. And, you know, I will take a little credit. Brian said nice things about me in his book. I was part of the inspiration for him to write that second book, which he had to do because he was onto something so big. Yeah. So any day trader, swing trader that's not using average volume weighted price, then they're missing out because that's what everyone does. And the thing that scares me, because only price pays, is when I was trading on the floor, you know, your job wasn't to be average. Your job was to do very well. I didn't go to school to be average, but the way people execute stock, if they're average or God forbid they beat it by a penny, you did a great job. You're getting rewarded with more order flow. It's hard for me to fathom, but that's the way it is. And so if you don't know your VWAP levels and you're not following that, you're missing out on what's really happening behind the scenes. And then algorithmic trading. Look at stocks that stop to the penny on 50-day and 200-day moving averages. It floors me that it's happening. Look at Apple this week. It rallied on the news that they're not making a car. Don't get me started. They were never making a car. But it rallied on that news. Where did it rally up to? A flattening 200-day moving average to the penny. And then it came in. Tell me that's not algos behind the scenes.
That's amazing.
Yeah, absolutely.